A smaller exchange like the TSX Venture can be a great place to find some bigger returns, but it can also be a wee bit on the risky side. Hold on to your seatbelts, folks. This is going to be a good one. We are all hopefully familiar with the Toronto Stock Exchange, or TSX for short. However, there is another Canadian exchange called the Toronto Stock Exchange Venture, or TSXV. The TSXV is a junior exchange designed primarily for smaller or early stage companies that do not yet meet the requirements for listing on the TSX. It has more lenient listing requirements, making it more accessible for smaller growth-oriented companies. The TSXV is often seen as a stepping stone for companies that want to eventually list on the TSX. It provides an avenue for these companies to access venture capital, grow their business until they can, of course, graduate to the TSX. The TSXV can offer certain advantages for investors that have their eye on growth stocks. It is almost like being a sports scout hoping to sign that next big star before they hit the draft. In this case, though, you are hoping to find the next big moneymaker for, well, your portfolio. Some of the other big advantages include getting in on stocks while they still have lower valuations. Thus, you are getting a much better deal for their shares than you're going to get once they move to the TSX. You do, however, have to keep in mind that this is a big risk, big reward scenario. So there is a better chance of losing money, which is why the importance of doing your due diligence is even more front and center. Join the conversation. Let us know in the comments if you have dabbled in some TSXV stocks. Your participation is well appreciated. Don't forget to like and subscribe to stay up to date on future content, and a huge thank you for that click. For today's list, we are looking at stocks on the TSXV that have the double-digit returns over the last 3 years. We also wanted stocks with at least a $5 share value, as we are not going to dabble into penny stocks for this one. Today's list has been sorted by their year-to-date total returns. So without any further ado, let's do this. Kicking off this list, we have Alvo Petro Energy with a ticker of ALV.V. They are based out of Calgary, Alberta, and they are a resource company that specializes in hydrocarbons such as, well, oil and natural gas, and these are usually found in Brazil. Well, for this company, they're found elsewhere for other companies, of course. They have a market cap of $312.67 million, and they have a pretty stable beta of 0.67. Their earnings per share comes in at 1.33, and they have a price to earnings ratio of 6.43. When it comes to their return on equity, it's very nice at 46.18%, and their debt to equity ratio, that comes in pretty darn low at 9.97%. Holy banana bread. I'm really kind of liking this one. They have a dividend yield of 8.852%. That is paid out quarterly in the amount of 14 cents USD per share. Their payout ratio comes in at a sustainable 50%. When we look at their returns on their 3-year return on investment, that comes in at 70.88%. Factor in those dividends and wow, we get 81.40%. That's not too shabby. When we look at their 1-year return on investment, that comes in at 27.49%. We do get a total return of 33.80%. And this year, year to date, their return on investment comes in at 12.16%. Factoring in the dividends, we get a total return of 18.48%. This is just a fantastic little energy stock that has a solid chance to keep on growing and returning the profits. Coming in at number 4, we have Topicus.com Incorporated with a ticker of TOI.V. They are based out of Toronto, and they are a provider of vertical marketing software and platforms. They have one of the higher market caps you're going to see today of $7.69 billion, pretty stable beta, 0.77. Their earnings per share come in at 1.14. Their price to earnings ratio is a little on the high side at 82.37, though that is absolutely indicative of a company that is doing a lot of growth. When we look at their return on equity, that comes in at 20.40%, and their debt to equity ratio, still not that bad, 53.97%. This company is pure growth, so we have no dividend to talk about. When we look at their return on investment, their 3-year return on investment, that comes in at 29.71%. Their 1-year return on investment, that comes in at 24.45%. And let's take a look at that year-to-date return on investment. That one comes in at 23.51%. This is a company I would not be surprised to see if they moved up onto that regular TSX, especially with that market cap being as high as it is. Taking our third spot, we have Patriot Battery Metals with a ticker of PMET.V. They are based out of Vancouver, BC, and they are a mineral exploration company focused on minerals that contain battery base and precious metals, such as both, well, lithium and gold. They have a market cap of $1.12 billion. Their beta, a tiny bit more volatile than the market average at 1.13. Their earnings per share right now are coming in negative at negative 0.06, something I, of course, don't like to see. Their price to earnings ratio, they have not reported one, and sometimes when you have a negative earnings, a lot of times companies won't even report the PE ratio because it is going to be a negative number. Their return on equity, though, they did report that, and that's negative 13.09%. Once again, something I don't like to see. Now, a saving grace, maybe their debt to equity, because that debt to equity ratio does come in at 0.57%. So they don't have a lot of debt, which is good. They have no dividend. Their 3-year return on investment comes in at 91.11%. That's massive. That's pretty darn good. That 1-year return on investment, that comes in at 49.80%, and their year-to-date return on investment, that comes in at a pretty nice looking 34.49%. This is one that I do think needs to come with extra caution based on that negative ROE, although having almost no debt does help to reassure that a wee bit. In our almost top spot at number 2, we have Decisive Dividend Corporation with a ticker of DE.V. They are based out of Kelowna, BC, and they are an acquisition-focused company that specializes in the manufacturing sector. They have a market cap of $138.79 billion, and their beta slightly more volatile than the market average. That comes in at 1.24. Earnings per share come in at 0.36. They have a price to earnings ratio of 20.69, and their return on equity, that comes in at 16.27. Their debt to equity ratio, probably the highest on the list today, 91.24%. When we look at dividends, this one does have a dividend. Their yield comes in at 6.443%. That is a monthly dividend paid out in the amount of 4 cents per share. Their payout ratio, though, a little high at 105.56%. That, of course, is not sustainable for the long term. When we look at their return on investment for the 3-year, their return on investment came in at 72.62%. Factoring in those dividends, we get 87.92%. So that's not too shabby. On that 1 year, their return on investment comes in at 35.17%. Factoring in the dividends, we do get 40.67%. And on the year to date, that return on investment comes in at 32.35%. Factoring in the dividends, we get a total return of 37.05%. This is a nice monthly payer, and they should get that payout ratio down as the market improves. I do have this one in the 0 to 100K challenge, and it has been the worst performer thus far, but I am still confident they can turn that around. In our top spot, at number 1, we have NGEX Minerals Limited with a ticker of NGEX.V. They are based out of Vancouver, BC, and they are a copper and gold exploration company that operates primarily in Chile and Argentina. Their market cap, that comes in at $1.08 billion, and they've got a very, well, twice as volatile as the market average beta of 2. Their earnings per share, once again, we're back into negative territory, negative 0.22. I don't like to see that. And their price to earnings ratio, negative 27.9. Not liking that. The return on equity, they have not reported that. And I have a feeling that if we actually did the math, it's not going to be pretty. It's going to be negative, no doubt. They do have one saving grace. Their debt to equity ratio is 0%. So they have absolutely no debt. They also have no dividends. So the 3-year return on investment on this one is 92.45%. That 1-year return on investment is 54.55%. And year-to-date 2023, that return on investment comes in at 44.60%. This is a company that is only in the top spot because that is how it was sorted. I almost didn't include this one due to some of their not so great fundamentals, but it is a good illustration of when you are dealing with some of these small stocks. They can look absolutely fantastic on the surface and then be a little scarier when you dig in deeper. Some of these stocks are definitely ones I am interested in, while there are at least 2 that I am not so crazy about. As you know, I'm not a fan of negative return on equity. As I mentioned earlier, I do hold DE, and there is at least one other in this list. I am wondering why I haven't already added them. If you are interested in any of these riskier TSXV stocks, be sure to do a really big heaping helping of due diligence before you place any of your hard-earned money on the table. Keep the learning going. Watch my video on Canadian utilities linked on the left, or test YouTube's recommendation skills by checking out the video on the right. Your choice will decide the winner, and I will see you in the next video.